Investing in real estate for beginners. Entering the real estate investing world can be scary if you don't have any prior experience. Before an investor feels secure and confident in real estate, it may take several years. That is why using investment techniques that are suitable for beginners is a terrific idea. They can nonetheless be quite profitable when handled properly, even though they are appropriate for investors with little to no experience. Welcome back to the Fancy Investor channel. If you're new, hit the subscribe button. It really helps us out. Here are our top 8 tips for beginners on real estate investing. Watch until the end of the video so you don't miss anything. Number 8. Real estate investment groups. A company that specializes in real estate investing is known as a real estate investment group. It pools investor funds to purchase apartment buildings and commercial real estate. They might even decide to purchase, remodel, or resell homes for a profit, because of how differently their operations are organized from real estate investment trusts. They might alter their investing approach and use a number of different techniques to diversify their cash sources. Investors that wish to benefit from real estate market's profits without having to handle property management duties frequently turn to real estate investment groups. Number 7. House flipping. If HGTV was one of the factors that motivated you to start investing in real estate, you probably already know what house flipping involves. In essence, you find a house that is being sold for less than what it's worth. Usually it needs some remodeling or repair. The property is then sold for a profit after renovations have been made. Investors who are invested in flipping houses should be aware of the risks and use extreme caution when performing their financial analysis. Numerous things might go wrong. To begin with, if you exceed your renovation budget, you risk not turning a profit. If the pricing or market conditions aren't suitable, you also incur the danger of not being able to sell the house. Number 6. Real estate syndication. A cooperation of real estate investors with the aim of finding and purchasing properties is known as a real estate syndication. The duties are typically shared by a sponsor or other investors. The task of finding possible investors and securing the contract falls to the sponsor. They could also be in charge of overseeing the property. Sponsors often donate their expertise and efforts rather than money to the investment. A syndication deal is investors finance the purchase and pay for any additional expenses required to restore or repair the property. Investors take on a more passive role and are paid over time through returns that are made every month or every 3 months. Do you like the video so far? Show your support and hit the thumbs up. Now let's get back into the video. Number 5. Purchasing rental properties. Are you prepared to own property? Purchasing rental homes might be an excellent strategy to guarantee a consistent monthly income. You will undoubtedly take pleasure in having a steady stream of revenue if you believe you can handle the obligations of being a landlord. You might even be able to use the rent you receive to pay your mortgage, maintenance costs, and repair costs if you purchase a rental property at the appropriate time and in the right market. Even better, you might even make a little money. You as the owner of the rental property can choose whether you want this income stream to be active or passive. A property manager can be hired by landlords who would rather not landlord at all. Some landlords decide to outsource only the upkeep and repairs, while others may decide to handle everything themselves in order to save expenses and increase profits. Number 4. Online real estate platforms. Online real estate marketplaces, also known as real estate crowdfunding marketplaces, aid in bringing together borrowers and investors. When a developer posts a contract or a project that needs financing, investors can choose to lend money or put up stock to fund the deal or project. As a result, there's a win-win situation where investors can profit from real estate investing without having to worry about ownership or labor. The project-related finance that developers require is available. Remember that financing real estate investments can be just as speculative and hazardous as investing in real estate directly. Always conduct your research before making a decision. Investors can select to participate in a single project or a portfolio of projects, and they will receive payouts on a monthly or quarterly basis. It's also a terrific method to geographically diversify your real estate investments. The funds may be inactive and subject to lockup periods when using a real estate platform, and investors must pay platform membership fees. Number 3. Real estate investment trusts. For individuals just getting started with real estate investment trusts are a fantastic place to start. The most popular kind, equity trusts, are essentially businesses that hold real estate with an income-producing potential. Shares in these businesses are bought by investors and then receive dividend payments on a regular basis. Despite the fact that many different investors use real estate investment trusts to diversify their current holdings, they continue to be a great entry point into the real estate market. Number 2. Real estate prehabbing. Prehabbing is a fantastic method for getting started in real estate investing. In contrast to a rehab, which requires funding for extensive changes, a prehab project just calls for minor improvements. Typically, investors will make little improvements to a property in order to attract more investors. Prehabbing entails making small, incremental improvements to a property as opposed to major ones. Number 1. Real estate wholesale. Wholesale is one of the quickest methods to get started in real estate. This novel tactic is acquiring a property for less than market value and designating an end consumer to take over the contract. Wholesalers are paid by adding a fee to the final contract. They never actually own the property. Because it doesn't require a lot of capital to get started, wholesaling is ideal for beginner real estate investors. Investors won't be buying homes, yet they may need money for effective marketing or good faith payments. Additionally, by engaging in wholesale business, investors can establish a solid network and have a deep understanding of their local industry. What do you think about real estate investing? Let us know in the comments below. If you liked the video, then hit subscribe and the bell. It really helps us out. This is the Fancy Investor Channel. Thanks for watching.